What's up, bros? It's never gonna happen here, bro. Never gonna happen, bro. These are my favorite types of people right now. I love it. The never gonna happen bros. This is why this little arbitrage I'm gonna share with you guys exists. And I just did this on a Instagram story. You guys can go follow me on Instagram. I'm gonna pin that thing to the top so the story will be saved, because I did it on the whiteboard, and I actually was gonna do this YouTube video for you guys on the whiteboard like a week ago. Then I didn't do it, and I thought, you know what, doing the video is more important than doing the video with the whiteboard, which I would prefer, but I just hadn't done it for you. So we're just gonna do it now. I'm just gonna drop some numbers on the screen so there's that visual so you can follow along and be like, I get it now, bro. But don't be a never gonna happen bro, because the never gonna happen bros are gonna be like, uh-oh, it happened, bro. Here's what I'm getting at, bro. There are times in history, US history, where the Dow has equaled gold. And what I mean by that is one share of the Dow Jones Industrial Average, 30 of America's largest company. Bro, all right, so let's get into it. So there are times in American history where 1 ounce of gold has equaled one share of the Dow Jones, what we call the Dow, which is 30 of America's largest companies. Think Coca-Cola, Apple Computers, Walmart, 3M, IBM, all those guys are in the Dow. So Caterpillar's in there, Chevron's in there, etc. So 3 times in American history, and because I've done this story so many times on Instagram now, I know all the numbers like back of my hand, which I don't know that well, but I know the front of my hand pretty good. Because I got this scar here where I cut myself once with a piece of glass, which is pretty stupid. But nonetheless, the dates are 1860. 1860, 1 ounce of gold equals a Dow. Well, that's right at the beginning of the Civil War, right before it really kicked off. 1933, so 73 years later, 1933, that's 4 years in to the stock market crash of 1929. That's the bottom of the Depression. That's where they actually confiscate gold, reprice gold, and from there, things move forward until World War II. But even during World War II, that ratio never came back in line again until 1980, which was after the inflation of the 1970s, when Paul Volcker said, okay, I'm bringing interest rates to like 18%. You're going to be paying like 18% for a home mortgage at this point in time, but I got to stop this inflation. Well, what happened is the Dow dumped, gold was ripping at that time, and what you could have done, what you should have done, is you should have cycled out of one asset and into another asset. And if you were living during these periods, call it the 1850s. I'm reading a great book called The Impending Crisis, about what's going on in Congress at that time and how you could see it. If you were a conscious individual, you could know problems were coming. It wasn't like Civil War, guys. And it wasn't a civil war. It was a war of northern aggression and a failed secession. But nonetheless, 1933, if you're living in 1928 and everything's crazy and Howard Hughes is making movies and stuff, you're probably, or should be thinking, more like Joseph Kennedy, going like, I'm not a super rich man, but I am a good Irish immigrant, and I've made some good money, and I think I'm going to take some chips off the table and wait a moment, because things are getting a little crazy. Or if you live through the 1970s and you've got basically like a Biden-like president, where you got refugee situation, you've got terrible, you just have, the exact same replay that we have going on right now. You should be taking some chips off the table and going into the metals, going into gold. And at which time these things flip. So gold becomes more expensive in terms of price, more valuable. The Dow Jones becomes less expensive, and at some point in time they equal 1 to 1. 1860, 1933, 1980. So that did it. Every 73 to 47 years is when those things occurred. I want to throw on a crazier idea onto this, where we go what we call further out the risk curve. And when we go further out the risk curve, we take more risk because it's not 100% guaranteed that this will happen. I want to throw on an example of going further out the risk curve to where we could actually get a little bit more leverage than just the obvious arbitrage that exists right now if we're patient enough to play this play. And before I do that, the Dow is selling at 33,000 and it has an annual cash flow. So every year you get a cash flow on the dividends paid by those companies. Not all of them pay a dividend, but on the dividends paid by those companies of $833. So If you hadn't had an ounce of gold in 1980, your best move would have been to have bought the DOW, and for exchanging your gold for the DOW, you would have $33,000 of value today as opposed to $2,000, and you would have $833 of cash flow a year as opposed to $0. What's interesting is that we're in this period, this fourth turning moment. There's a book below. You guys can go check out that link. I listen to it every 2 months. It's amazing. But we're in a fourth turning moment where these ratios are probably going to come back in line because they sort of kind of have done that before on fourth turnings previously, every single time guaranteed. The 1980 thing was an interesting situation and a currency debasement. So if we were to go further out on the risk curve, we would add the silver ratio on top of that and speculate further and go, well, if gold is going to equal the DOW at some point in time, well, how many ounces of silver equals gold? Well, Isaac Newton tells us in 1717 that gold and silver in the Earth's crust are 15 to 1. How he figured that out? Well, he was British. He had all their diaries. He had all their data. You know, he was actually their Secretary of the Treasury after this big coin debasement in 1696, where they were like, listen, bro, you invented calculus. You came up with the concept of gravity. You came up with planetary motion. You invented a telescope. Like, let's bring you in for the Secretary of Treasury job in retirement, which he does. And at that point in time, he goes, look, let's just bring it down to first principles because we got a mess going on here. And let's just get this thing ironed out. And what he said is that silver to gold in the Earth's crust is 15 to 1. Modern day scientists say, yup, the guy nailed it. That's exactly what the ratio is. So what we can do is we can look at the historical ratio and go, well, okay, what's the ratio been in America? Because it's great to know what the Earth's crust ratio is, but in the recent years, the last 100 years, what's actually been the ratio? Well, up until 1933, the ratio from 1860, essentially, when we kind of get our crap together after the Civil War, to 1913, which is when we invite the central bankers to come in and take over our entire society, is 20 to 1, which means a $20 bill is an ounce of gold. Which, if you think about Henry Ford's $5 workday, is pretty incredible how wealthy we were. Every Thursday, guys screwing on tires, working a 12-hour day, are getting $2,000. And that's not even including their Friday work. So that's pretty incredible how wealthy the average dude had the potential, how much opportunity existed to him in 1903. He could literally obtain an ounce of gold with his labor every Thursday. That is wild. At that time, $1 is a dollar. It's literally $1, which is a unit of weight, which is 1 ounce of silver. So the ratio we're using up until 1933 is 1 to 20. 1933, the U.S. goes broke and has to revalue things, and we revalue gold at $33 instead of $20. And so that changes the ratio to 1 to 35 because the dollar stays the same. And then what occurs is over the last 50 years, the ratio has been about 1 to 40, give or take. So if we want to go further out on the risk curve, we would go, well, what did the paper market say silver and gold is playing at? Now we're introducing this additional factor, the US dollar, which is a floating abstraction. It's a bizarre piece on the chessboard. It's this thing that we won after winning World War II because like of Bretton Woods and all of the things that we did, and we're the largest exporter and creditor nation, and etc. And our current elites are just tossing around the US dollar like it's something they earned. You know, like Biden's almost like he worked on D-Day, you know, like he was running the boats or something like that. And he's just like, oh, Russia, I'm going to cut you off the dollar system. Take that. And it's like, that's not really how things work. That's also how dollars die, bro, especially when it's just a floating abstraction. So what happens is, like Ayn Rand says, you can ignore reality, but you can't ignore the consequences of ignoring reality. So if you're like me and you're looking at this rationally as we can, because it's kind of emotionally exciting, it's like, well, at one time or another, the reality is going to be the reality. So what's happened here? The ratios have been 1 to 20 to 1 to 40 in the last 100 years. Earth's crust is 1 to 15. The current mining ratio published for 2021 was 1 to 6. 2020, it was 1 to 7. 2019, it was 1 to 8. I believe that's by the Silver Mining Institute. Keith Neumeyer shouts those numbers out, so you can cite that source. He's kind of the guy for the source. He's the CEO of the largest silver mining company, First Majestic. He kind of knows what he's talking about. So basically, we're half of the mining ratio is essentially half of what's in the Earth's crust. Because silver is higher to the surface, the Romans, the Greeks, the Aztecs, they had an easier time finding it. Nowadays, we can use big Caterpillar excavators, get up in the Alaskan tundra, start digging for that stuff. Well, you get 100 feet down, you're going to find some gold. You're not finding any silver. It's found at the top. It's found in the riverbeds. It's found just at shallower depths, typically. And so therefore, our mining ratio is half of what the Earth's crust ratio is. So you can speculate by taking that DOW ratio and going like, okay, there's some interesting algebra, real lightweight calculus to be done here. One, DOW to gold ratio is a pretty safe way to play this. Buy gold and literally wait for that ratio to flip into the DOW, live off the dividends and cash flow for the next 50 years of your life. When it gets expensive again, like it has been, like a 15-to-1 like it is now, or even higher, like it's been a 30-to-1 previously, maybe that's when you make the flip. You know, those are the moments that you make the flip. But nonetheless, let's look at the silver and we go, okay, well, what if this ratio comes more like the 1-to-40? Well, you can take the $2,000 of gold price today, which would get you $33,000 of value in the DOW in today's terms, and you can cut that in half to $1,000 of silver value today at some point in time will get you the value of the DOW. Now, the value of the DOW is going to be beaten up when you buy it, but long term, with a long-term view, that's the value trade that you're making. If you were to think that the ratio was going to come back to 1-to-20, you would be buying the DOW for $500 of today's priced silver value in US dollars. And there's no guarantee the US dollar, the floating paper currency, is going to be here tomorrow. But in today's price, you can buy silver for that price. And if I can help you do that, because I'm a broker for Miles Franklin, I would love to help you do that. We've sold more silver this week than any other week previously that I've sold silver, which has been exciting. And I've had this conversation with many different clients, and they've all been like, this is interesting. And I'm like, it's interesting. Think also that 1860, 1933, 1980, though the trend got better, those were hard times. 1860 is the hardest. 1933 is not as hard as 1860, but it's still hard. 1980 is hard times, but not as hard as 1933. So the trend has still been upward, but it's never been a good year when those ratios have happened. And maybe when you're getting through this trade or you're doing this trade, you don't do it all at once. You don't wait for the exact moment that it's a 1-to-1 or the exact moment that silver is 40-to-1 or 20-to-1. You got to play. You've got to figure out how you want to run your chessboard. You know, maybe you start converting things at 50-to-1, and then you wait for your very last bits at 10-to-1 because you think, hey man, that mining ratio is real low, and it's possible that we could have a mining ratio of a paper to gold. I mean, the silver to gold ratio could be that close, is what I'm getting at. I don't really know. But you have to think through how you'd want to run that trade and how you would get through that trade. The main reason people buy silver is to get through bad times, to have a store of value that's outside the banking system. If you're in Canada, something that Justin Trudeau can't steal from you by closing down your bank account. I mean, these things are starting to become obvious as to why you should own them. But if you look at things with a broader view of history and going like, yeah, we're going to go through probably some hard times ahead, really hard times ahead, most likely, but then ultimately we'll get through this period of time. And, you know, if all things go well, we'll have another good cycle, another 50 to 80 year cycle, and we'll be able to enjoy that. And so we'll be able to partake in that wealth transfer. So what I'm getting at is when you hear people say this is going to be possibly the largest wealth transfer in the history of mankind, what I'm getting at is that's because we have a paper reserve currency, and that you can literally buy a hard asset like silver, which is 50% off of its all-time high. And you can literally buy $500 of it. And if the ratio were to come back to 1-to-20, you could theoretically at some point in the future, probably not based on history, it would be 2027, 2030, 2035, in that range, that you could exchange it for an entire share of the DOW. And the DOW would recover if you believe in the long-term prospects of America and humanity in general. And you would benefit from essentially $500 spent today would get you $833 of today's cash flow paid tomorrow, but today's cash flow value for the next 50-year cycle, and also provide you at the end of that cycle a $33,000 today's value that you would then, you know, hopefully your family is smart enough to inherit it and flip back. and know that this is a cycle. But my point there is that if I can help you buy these assets, my email is below. Hit me up, just subject line silver, and I can help you get into these trades. Or start the trade, meaning take some physical possession of silver. If you have a ton of cash to move, you can do self-storage options, which is fully insured, and then it's just as simple as logging into an account and just mouse clicking around when the ratio comes around. That's the advantage of self-storage. I'm actually going to start building position there myself on having like Brinks actually hold some of my stuff. I like to hold my own stuff, don't get me wrong, but I'm going to start switching that up for that reason. And then it's easy clicking the button at some point in time when I want to go from silver to gold, gold to the Dow, boom, 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 done. And I expect that to happen over here in the next 5 to 10 years. And that would be literally the biggest wealth transfer in the history of mankind. So thank you guys for watching. Please share this with a friend or family member or a crazy parent who's like, can't happen here, bro. Never gonna happen, bro. The empire, nothing's ever gonna happen to the empire, bro. You can cut Russia off the world's economy and nothing's gonna happen, bro. It's all gonna be good. Send this video to a nothing's gonna happen, bro. And hopefully it changes their mind a little bit. But more importantly, make your plays, make your trades, build a position into this stuff. Because it's happened 3 times in American history before. It's happened the last 2 fourth turnings before. And we are right smack dab in the middle of a 4th turning and a 250-year revolutionary cycle. So this could get absolutely gnarly, insane. And I want you to get the wealth transfer, because when this happens, I think we have the best odds at having human freedom and prosperity moving forward if the average guy has more wealth than he otherwise would have had he not taken advantage of these times and only allowed the political elites to do so. Because when this is all done and everything has to rebalance out, I do think that by the population having good, solid, sound money and value, and then flipping into assets of the nation and then rebuilding that nation, I think that is the absolute most positive outcome that we could possibly have. So I appreciate you guys sharing this video, commenting below. Let me know your thoughts. If you have any data, any good links, please share them below. That is super helpful. I will pin really good comments. Thank you for the likes. It's making this channel like really pop, and that's all because of you guys. So until next video, I'll see you down in the comments.